Is this perhaps the point where the Fed eventually loses control? I mean, I guess you could make the argument they've lost
They've already
control.
lost control.
Yeah.
They've already lost control. I mean, just the fact that they're having to pump 80 to 100 billion dollars into the banking system every night, they've lost control.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and certainly a fascinating start to the year here in 2020. We have a lot of volatility in the gold and silver markets, events happening geopolitically, and fortunate to have Bill Holter on the line with me here today. So before we get started, go ahead and hit that subscribe button so you can stay posted when fortunate to have folks like Bill on. And with that said, Bill, appreciate you joining me today. How is everything going with you, my friend?
Good. Thanks for having me, Chris.
Well, it's a pleasure to catch up with you. I've really admired your work and research that you guys do over with Jim Sinclair at JS Mineset. And obviously, we've seen some volatility in the metals, both gold and silver, and a few people are more piped in and tuned into that scene than you. So curious if you could give us an overview of what you're seeing in the markets right now.
Well, we saw gold and silver start to firm, I guess, about the first part of December, and I think what gold was sniffing out is the problems in the repo market and the reaction by the Fed. It looks and smells like it's monetization.
Yep.
And interestingly, once this week so far and once last week, the Fed in total has pretty much outright monetized about $10 billion worth of debt, 6-point-something billion last week, and I think it was 4.6 billion this week. The Fed's not allowed to buy T-bills at auction directly, but what they did was they waited exactly 3 days and took those T-bills off the hands of registered dealers. So we're now to the point of, it looks like, outright monetization.
Yeah, and Bill, actually, for folks who may not have heard this before, perhaps if you could just explain how that works. I've always thought that's quite a racket. They can't even directly monetize it, but they actually have one of these banks, which is often part of the Federal Reserve. Could you explain that setup for folks?
The Fed is not, we can't, in essence, we do borrow from ourselves. I mean, it's the Treasury issues either T-bills or notes or bonds or whatever, and the Fed is not supposed to be able to buy those directly. That's happened umpteen times in the past where a central bank funds the borrowing of the Treasury, and that ultimately destroys the currency. So the rules in place that the Fed cannot directly purchase treasuries from the Treasury. So their way around it, what they've done here is a direct dealer or a couple direct dealers have stepped up to the auction, purchased the T-bills, and then 3 days later the Fed gave that amount of money to that dealer, and the dealer gave them the notes or the Treasury bills.
Yeah, it's certainly a fascinating setup that they have going on there. And back to the repo lines that you mentioned, interesting how it's been going on for a couple of months. Still no word from the Fed or the president why that's actually happening. I hear a lot about a bank could have failed already. We hear about Deutsche Bank. Do you have any thoughts of what specifically is happening that's requiring that?
We don't know if it's an individual bank or banks. They did get the repo market calmed down for the 31st. And then interestingly enough, we've had, I guess, this past Friday and then yesterday, there were 2 more oversubscribed auctions. So the problem in the repo market is not over. they put the flames out for the 31st, but it looks like it's reigniting.
Yeah. And I have yet to hear from anyone who seems to think that even with these repo lines that's fixing anything. Instead, I think everyone I've had on the show or talked to myself continues to feel that this is just going to keep going on and getting bigger. Is that your take on that too?
Well, yeah, I do believe it's going to get bigger. I think it's going to become all engulfing. And what's ultimately going to happen is markets have grown too large. They're too big for a central bank or all central banks to step in.
Right. Is this perhaps the point where the Fed eventually loses control? I mean, I guess you could make the argument they've lost control.
They've already lost control.
Yeah.
They've already lost control. I mean, just the fact that they're having to pump 80 to 100 billion dollars into the banking system every night, they've lost control.
Yep, sure does seem that way. Obviously, you dig into the gold and silver markets quite a bit. We've seen some rise in the price. I'm hearing a lot of rumors of issues on the LBMA. I know you've talked for years about how there's just a fractional reserve system in these metals where so much more paper out there than actual metal. Curious if you're hearing anything on those terms, and if we're getting towards some sort of break point where someone shows up, asks for physical metal, and it's just not there.
Well, Chris, common sense tells you that it's already blown up. It's a fraud. And I say common sense because last year in total, COMEX sent over 6,000 tons worth of contracts to London for delivery, for settlement. Now, once the contracts get to London, there's no way to track how or if they've been delivered. But the common sense part is there's no hoard anywhere in the world of 6,000 tons. Right. The U.S. supposedly has 8,300 tons, and then the next largest holders are the IMF, Italy, and Germany with 3,000 tons or less. So for London to say that they've delivered in the last 12 months 6,000 tons is complete bull.
Right.
I mean, you just have to look at it and you can see by the size that it cannot be done, but yet they're saying, oh, it's done and everything's fine. It's an impossibility.
Yeah, it's certainly one of the things that caught my eye early where the numbers never quite added up. I'm curious also, obviously there are these banks that are really short, and while perhaps it's still an open loss if they haven't closed it out, someone is taking a beating as the prices drift higher. Do you think these guys are getting worried at all, or is it just that bankers, all they know is just keep hammering it on and hopefully the mess blows up on someone else's watch? Or I'm just baffled of what, one of these guys sitting on a trading desk, if they think that they're just going to be able to drive the price lower, or what do you think's the mindset in there?
Well, of course they're worried. And if you go back to, I think it was early part of November, COMEX changed the rule as to what can be used as collateral. They had two categories. They had registered and eligible. And they added a third category, pledged gold. And right. Pledged gold can be anything. It could be doré, and there's no way even to verify really if it exists. So what they did was they added this third category to create margin, if you will, in order to be able to open more contracts. And we've seen the open interest go up as high as it did just ticked under 800,000 contracts, 797,000 contracts. Right. That's 80 million ounces of gold. That's global production right there.
Yeah.
And COMEX in their registered category has less than 1 million ounces that's deliverable. So that alone is 80 to 1.
Yeah, that's actually something I was curious to ask you about. If I know you've spoken about that before, but I think it'd be helpful for folks to hear again. For every ounce of gold and silver that's out there, how many people think they own that?
The number is altogether probably 300 to 500, but just on COMEX alone, it's 80. It's over 80.
Yeah,
And
it's
what that means is when there is a cash call, just on COMEX alone, 79 people will find out they're not getting their gold. But broadly, when you add in all derivatives, when you add in the ETFs, when you add in all the paper gold, it's 300 to 500 paper ounces for every 1 real ounce outstanding. So you're talking, several hundred people are going to find out the only thing that was gold was in the name.
Yeah, it's amazing that it's set up like that. Again, I appreciate over the years how you've been warning people about that and the difference between having physical bullion and having a paper claim.
And Chris, that's not by chance. It's set up this way, not by any chance or coincidence. The reason it's set up this way is because they've continually, with paper gold, they've continually diluted the price. And that's how they've been able to keep the price down.
Yeah, and then of course,
think of it as a slingshot. With every action, there's an equal and opposite reaction. So the slingshot is fully taught, and gold is not going to go to a theoretical fair value. It'll go far beyond.
Yeah, that's a good point, because I hear, when people make their comments or forecasts for the gold market and they say, well, maybe we'll hit 1700 this year. When I've studied these dynamics and when you have this situation like you're describing with so much leverage, it seemed to me often like a binary setup where as long as this Ponzi scheme is intact, maybe it'll float around a little bit, yet whenever we do reach that point where whatever type of default plays out, when you find out the metal's not there, we're talking about numbers bigger than 1900 or $20 silver.
Well, Chris, gold is the only asset that central banks and sovereign treasuries have that can balance their books. So what I'm saying is, with the amount of debt outstanding, and I've done this calculation, I did this about a year and a half ago. If you take, for instance, the U.S. says that we have 261 million ounces of gold. Has not been audited since the 1950s, but assuming that we do have the gold, and I don't assume that, I believe we don't, but
Right.
Assuming we do have the gold, if you divide that gold into and it's now 22 trillion. When I did the calculation, it was 21 trillion. You come up with a number of $87,000 per ounce. In other words, if we had to pay our debt back with gold would have to be $87,000 an ounce to do that.
Which is stunning. And I mean, along those lines, do you think that they have a reset planned, or is there a plan in place, or do they just keep going until it blows up?
I think there's going to be two resets. I think there's going to be a man-made reset that won't work, and it very well may involve the IMF and the SDR. I'm not sure, but the man-made reset is going to fail, and I would guess within 6 months or maybe even less, there's going to be a Mother Nature-made reset where all markets reset to fair values and unfettered with derivatives, because the derivatives are going to blow up. And
Yeah.
It's important to understand, Jim has said this many, many times. He's asked the question, what is the value of a contract that cannot perform? And the answer is zero. So what's going to happen is you're going to have zeroed out derivatives markets.
Yeah, it's going to be incredible to see how that does play out. Perhaps last question for you today here, Bill. Obviously, we hear about the problems, and, we've lived through subprime debacle, collapse of the dot-com bubble. And I get it that there are a lot of people that are concerned out there, and rightfully so. Although I wonder if this necessarily has to be complete Armageddon. I mean, I accept certainly it's going to be a tough time for derivatives holders, governments, bankers that have been doing some not so ideal stuff. Curious, do you see there's a possibility though that, if we actually had some sort of sound money that prevented so many resources being used for wars and blowing up holes in the sand and all the other nefarious things that the governments get involved in, do you see it being possible that if enough people get what you're out there talking about, that perhaps there could be a better life on the other side of this?
I believe there will be a better life on the other side of this. I do think that currencies will be backed on a ratio form by gold, not convertible. Gold currencies will not be convertible into gold, because anytime a currency is convertible, it converts. In other words, the gold gets sucked out of the treasury. People convert. You have to understand, this is not the dot-com bubble. This is not the subprime crisis. This is the everything bubble. Everything on the planet, virtually all assets, except for commodities, and especially gold and silver, have been held down by derivative contracts. They've been sold short, and that's what's kept the prices in check. But look at stocks, look at bonds, or the inverse interest rates. Look at real estate. They're all at unsustainable, totally unjustifiable levels, and it's all been done with borrowed money.
Yep.
It's been done with borrowed money to the point that debt is considered an asset. The more debt you have, the wealthier you are. And once the credit markets begin to seize up, and they will seize up because there's more debt outstanding than there is available money to pay it back. And we've gotten to the point of debt saturation where now even sovereign treasuries can't afford. I mean, look at the U.S. The U.S. now, where are we? 107, 110% of debt to GDP. If you go back just 20, 30 years ago, any country that went over 100% debt to GDP was entering banana republic land. And now the world debt to GDP ratio is over 300%. So there's three times more debt than there is GDP. It's unsustainable. It can't be paid back. And once the credit markets do begin to seize up, life in general begins to seize up, because everything you do, everything you touch, everything you come across every day is funded by the use of credit. And I use the example of a loaf of bread. The farmer uses credit to buy seed. He uses credit to buy diesel. He uses credit for his machinery. Then he ships wheat. The silo uses credit. Then you've got truckers that use credit. You've got the producers that actually produce the bread. They use credit. Then it gets shipped again, credit with the truckers, and then it goes to your local grocery store, and they use credit. And at this point in time, a lot of people use credit to eat. So the whole sequence uses credit. What happens if just one of those credit lines falter? And it's not going to be just one. It's going to be credit across the board. So what I'm telling you is your everyday, daily life is not even going to be recognizable to what it is today, because things aren't going to work.
Yeah, certainly. It's an unfortunate situation our government has left us in, although again, I really do appreciate that you speak up about these things that aren't always easy for folks to hear. Yet I know you talked often about, the experience of just try going a weekend living off the grid or have things prepared and stored. Hopefully things transition smoothly, but always good to be prepared in case they don't. And perhaps in closing, you can just let folks know where they can find you and stay up to date on the things that you're reporting and helping folks understand.
You can go to www.jsmineset.com.
And we will have that link below. So Bill, want to thank you again for joining me today. Really do appreciate everything that you've done and are doing, and helping people at least be prepared for what's coming and getting through what could be a challenging time. And thanks for joining me today.
Thanks for having me, Chris.